Alright guys, I am here. So you guys should be able to see me. If you guys can see me, please type in I can see you on the chat just so I make sure that you guys are able to see me so I can get started. Just want to double check. So if you guys can see me, please type I can see you guys in the chat. Okay. Alright guys. Okay. I'm gonna get started, okay guys? Alright. So what I'm gonna go over today is one of the setups that one of my favorite setups that I like to trade, that I actually love to trade, is the earnings breakout. And so I'm going to go over just the principles of swing trading and what is it all about, how does it work, how are you able to, I guess, beat the market. In reality, you're not trying to beat the market, you're just trying to take whatever the market gives you. So, a lot of people think that swing traders or day traders try to beat the market. It's not true. They're not trying to beat the market. They're just really literally trying to take whatever the market gives them with good reward to risk ratios and high probability of success on their trade. So that's pretty much what a trader does. Their goal is to make trades that give them high probability of success, and they give them a good high enough reward for the risk that they're taking before they take any trade. So I'm just going to show you guys the first steps of principles of swing trading is charting, I guess. And the basics of the basics is learning how to read candlesticks and also learning how to read volume bars, because the most important thing when it comes down to trading, either swing trading or day trading, you have to understand how to read the charts. And I'm going to show you guys. Actually, I'm going to show you guys Netflix. This is actually one of my favorite stocks to actually swing trade and day trade. Actually, one of the stocks that I've probably made the most money over the last couple of years is actually Netflix. So let's take a look at the chart. I'm going to go over the 6-month chart, and I'm going to show you guys one of my favorite setups. Well, before I show you guys the setup, I want to show you guys the candles. So one of the best way to read charts is through candlesticks. And when you guys get Thinkorswim, if you guys are able to download Thinkorswim or whatever platform you guys decide to download, when you guys decide to start trading, the best way to read charts will be through candlesticks. So just so you guys teach you the basics of candlesticks, very, very simple. A green candlestick means it went up, means a bullish, or actually the price went up. So if you look at this candle, let me zoom in on this candle right here. So if you guys look at this candle, the opening of this candle is actually at the bottom, and the closing of this candle is right here. Now these little tails right here, we call them wicks. The bottom tail and the upper tail, they're called whips. Now this is the low of the day, and this is the high day. Now these candlesticks, each one of these candlesticks represents a day, because that's the way I set it up. You could also, of course, change it to monthly or weekly, so you could have monthly candlesticks or weekly candlesticks. Now for the type of swing trading that I do and day trading that I do, I use only day candles. So daily candles. So each one of these candles is equivalent to one day. All right. So the next thing that I want to mention is the opposite, a red candle. So a red candle means that the price went down. So again, the opening was for this candle was around 190, and then the closing was around 182. So the price closed for that day at 182. Now again, this wick right here, this is the low of the day. All right. So again, green candle means positive, the stock went up. Red candle means negative, the stock price went down. Simple as that. All right, guys. So I just wanted to make sure that that's the basics of the basics, candlesticks. And the reason why candlesticks are so important is because that's over time that's gonna help you read price action. Because the most important skill as a swing trader and a day trader is reading price action. You have to know how to read the price action. Now, this is a skill that takes time. It doesn't happen overnight. It's pretty much like learning how to read. Like literally learning how to read. If you guys remember in grade school when you guys first started to learn how to read, it took you a while. You're rusty, you probably were slow at reading, but over time, the more you read, probably the faster you were able to read, and the faster you were able to comprehend what you were reading. Same thing with reading charts, reading candlesticks, reading patterns. When you first get started, everything's gonna look weird. Like for example, like this is probably for you guys. It looks all sorts of weirdness. It goes up, goes down, goes up. You probably don't even know when will be a good time to buy or sell just by looking at this. And that's how I was when I first started. It's very confusing. And so I don't blame you guys. But again, just remember that this is a skill that takes time. It doesn't happen overnight. It's like I mentioned, it's like learning how to read. It will take a couple months, to learn how to read if you do the proper analysis every single day. So I just wanted to mention that really quickly. So again, basic candlesticks. Green one means went up, red one means down. Now, the other cool thing about reading price action is also volume. That's the other thing that I want to mention. So if you guys could see, this big green candle was followed by big surge in volume. So you see this huge volume bar. Now, if I put my cursor above that candle, you guys can see that and that day, volume was around 41 million shares, which you can see right here on this side. You guys can see that volume for that day was 41.5 million shares. So that's a lot of shares. So that's a lot of volume. And then the reason why a lot of traders, have this, stigma that they can make a lot of money is because there is a lot of volume. Think about it. 41 million shares were traded of Netflix on this day, which was actually July 18, 2017. If I do some quick math, 41 million shares. Actually, I don't even know my calculator is even going to be able to hold it. But 41 million shares times, I say an average of $180 per share. That's how much money was flowing around just in that day in that stock. Which is a lot of money. So we're talking about millions and millions of dollars are traded daily on Netflix. So when there's so much liquidity in a stock, that means you could go with size. And that's why a lot of traders like to trade big stocks like Netflix, Amazon, Facebook, because you could go big. When it comes down to trading stocks, it's not about making a couple $100 a day. Some of the hedge fund managers, hedge fund traders, they're looking about making a couple million a day. And I know that sounds crazy. I know for a lot of you guys that sounds crazy, but I actually welcome you guys to do some research on hedge funds and how much money they bring in. But some hedge funds bring in more than $1 million a day, in profits. So just by trading stocks like Netflix, Amazon, things like that. And actually, I got a calculator really quick. I'm just gonna do some quick math. 41, 587, 395 times 180. So actually, for this day on July 18, 2017, $748 million are traded back and forth just in one day. That is insane. So for a hedge fund, again, they only need to make $1 million out of those, from a move, which they have the volume, they have the money to make that kind of money. But for small traders, like myself, hey, I only really need to make a couple $100 and not $1,000 a day, and I'm good. You know what I mean? There's an adage that a lot of swing traders and day traders say, $1,000 a day keeps the 9 to 5 away. So, if you can make $1,000 a day trading, hey, you don't have to work a 9 to 5. So, just keep that in mind. All right, guys. So I just wanted to quickly show you guys that the reason why the stock market is a big wealth creators, because it's such volume. The market, the amount of money that is traded on a daily basis. If you put the whole stock market in perspective, like the S&P 500, which is trades when it's talking about over 500, the biggest 500 companies in the United States, we're talking about trillions of dollars traded daily. It's an insane amount of money that's traded daily on a daily basis. So there is a lot of money to be made. That's why the wealthiest people in America are actually either long-term investors or hedge funds. Hedge fund are actually one of the insane amount. They create insane amounts of wealth really quickly, just literally by trading large positions on stocks. On the S&P 500 or even futures. So I just want you guys to keep that in mind. All right, guys. So I just wanted to quickly mention that really quick. Going back to price action, I'm going to show you guys my favorite setup that I love to trade. Is actually it revolves around earnings season. It's an earnings breakout pullback play that I actually love to trade. Now, when it comes down to trading, being bullish in the market, the first thing you have to look at is the market overall, which is the S&P 500 and the NASDAQ. Now, if you're trading technology stocks, then of course you have to look at the NASDAQ or the S&P, because the S&P 500, part of the sector is technology. So either the NASDAQ or the S&P 500, you can't go wrong with any of those, especially if you're trying to trade a technology stock like the FANGs, Amazon, Netflix, etc., etc. So the first thing you want to look at is price action. Is the market as a whole trendy? Which it is. If you guys could see the market in the last 1 year, actually this is 1 year, since Donald Trump got elected, the market has been trending. And what I use to kind of help me better visualize the market that's trending, I actually use moving averages. So I do have moving averages that I put on my charts to help me better visualize trends. So I added some moving averages. These are the most common moving averages used by traders. We're talking about all sorts of traders. Even algorithms use these moving averages to make decisions on trading. Because the reason why, because they're the most commonly used by every single trader. And you could also just look at the chart to see if price action respects those moving averages. And if it does respect it, then of course it's a good moving average to keep in hand. So the red one is the 200-day moving averages. This is the long-term moving averages. So this red line represents the 200 moving average. So I'm going to go last 5 years, which actually that is the last 5 years. So you guys can see, when price is above the 200 moving average, it tends to keep trending, especially if it's above the 50, which is the orange line. So the orange line represents the 50-day moving average. And I don't know if you guys remember last year, in August 2015, there was a lot of volatility in the market. And if you guys can see that, price broke down below the 200-day moving average, and all of a sudden there was a huge sell-off. So the reason I believe there were these big sell-offs was because of algorithms that trade based on moving averages. So when you see the price going below the 200-day moving average, automatically a lot of algos have sell orders and they sell off. And the reason why you see these fast-moving downtrends or washes is because there's a lot of stops. So a lot of stops are being taken out automatically. So you see these huge washes. And then you see a lot of volatility because of that. And then when price goes above the 200-day moving average, it starts to trend. And I want to show you guys actually a very, very important date, how politics and I guess you could say macroeconomic events do affect the market. And that's one thing that also you have to keep in mind when you're trading long term, or you're looking into, I guess, swing trading. Big economic things do matter. For example, when Donald Trump got elected, which was actually on November 8th, or November 9th in the morning, people knew about it. The next day, there was a huge volume surge in the market as a whole, um, with a huge move in the market. So this was actually, I believe the market moved in like 3% on this day, and you guys can see the huge volume bar right here. Um, so after that day, you guys could see the market literally just trended, and it's been trending ever since. And again, like I mentioned in the last video, understanding those macros, like understanding how tax policy affects stocks, and knowing how that affects trending markets is very, very important. So that is something, of course, that you don't have to be an expert in knowing politics and what's going on behind the scenes. The most important thing is learning how to read the price action. So if you were a trader that has been trading for many years, if you read this, you saw this huge volume bar, and then you saw the market trending, definitely you would have been bullish. Without even knowing that Donald Trump got elected, or actually it doesn't even matter who gets elected. What's the most important thing is how does price and volume react to whatever happens in the market or macroeconomics or politics. That's really what matters. That's pretty much it. So, okay, so very important, is the market trending? Yes, market's trending. Price is above the 200-day moving average. Price is above the 50-day moving average, and price is above the 9 moving average, which is the short-term moving average trending line. So 200-day moving average, long-term trend line, 50-day is medium trend line, and the 90 EMA is the short-term trend line. So if you guys can see, it's trending. So the market overall is trending, which, a term for that will be bullish. So we are in a bullish market. So when we're in a bullish market, there's a lot of opportunities to trade, to make swing trades, day trades, long-term investments. Day trade doesn't matter. So we are in a bullish market right now. All right, so we know that we're in a bullish market, so let's look at setups. All right, so I'm going to go with Netflix. Again, like I mentioned earlier, one of my best favorite stocks to trade. So this is pretty much the earnings breakout pullback trade. All right, so I'm going to go back 1 year. And I'm going to show you guys where I traded this. I actually traded this a couple times. So let's see, where is one that I liked that I traded. All right, I'm going to show you guys this right here. So one thing that's very important for you guys to keep in mind is when there's earnings season, it presents a lot of opportunity for swing trading and even day trading, because there's a lot of breakouts. It's a lot of stocks moving. Companies report their earnings. If they're good, the stock tends to move up and then start trending. My favorite type of setup is actually earnings breakout, like I mentioned. So stock breaks out in high volume, and then it pulls back, consolidates, and it holds, and it starts trending again. So this is an example right here in Netflix. So Netflix on July 14, 2017 reported earnings, and I guess the market liked it. Now, sometimes it doesn't even matter what the earnings report says, or if they beat their earnings estimates or whatever. That doesn't really matter. What matters is how do traders react to that news. Are they bullish or are they bearish? So if the stock breaks out in high volume, you see this huge gap up right here. So a gap up means that the stock literally gapped up prior to last day's move. So you guys see that yesterday's move closed right here, and on the day of the earnings, it gapped up. So when the stock gaps up on earnings and high volume, if you guys can see that huge volume, that's a bullish signal. So when I see that, the first thing that I think about is, okay, I'm going to put this in my watch list, and I'm going to see how it reacts if it pulls back, so I could trade it on a pullback. So the next thing that I do is I look for support and resistance levels. So the last resistance was right here. If you guys can see, the last top was right here. So that was a resistance that I actually put in my chart to keep in mind. All right. So stock broke out, high volume, good earnings report, market liked it. It ran a couple days and it started to trend back, try to pull back, which is fine. No more consolidation, profit taking. I don't really chase. We're very important. I don't like to chase. So after it broke out on high volume, ran a couple days and it started slowly pull back. So I was looking for a pullback and support on this level, which if you guys can see that, perfect pullback on this level. So perfect pullback on this level. It's like, again, this is support level, support and resistance levels. They tell a lot of truth, man. They hold very true. So that's very important to understand support and resistance levels. So this is a support level right here. If you see this line, reason why is because the last high was right here, and so we're looking to see if that level holds, which it did. So Netflix broke out in high volume, solid for a couple days, pulled back, and it was holding support all this time. So I did actually trade this Netflix stock and actually made money on this trade. I ended up buying actually, let me see, I think I ended up buying once it broke out of the 90 EMA at high volume. I think it was either this day on the 28th or the 29th. Actually, no, it was in the 30th because I wanted to see some strong volume. Then not only did the price hold, the 167.6 hold, but also that there was some support. So I actually ended up buying on August 30th. So I bought it when the confirmation that the support held and there was volume. They picked it up above the 90 EMA and above the support level, and I put actually my stop below that. So bought it right here around 830, around 170, 171. Put my stop below that around 164, 165, and I just let it ride. Let it ride. So now the next thing is resistance. So you buy near support, once it confirms, once it holds, and then you see a little bounce, and you want to sell near resistance. So what is resistance? So the next resistance will be the last high. What was the last high? It was around 191. If you guys can see this level, 190, 181. So I held my long position. It was trending perfectly on a 90 EMA, and I actually ended up selling it around on this day on the 190 because stocks tend to hold, tend to gear towards hold levels and half dollars. So the next hold level was 190. So I did end up selling around this area. Now on this day, didn't actually hit 190, but I was already up. I was definitely up more than 2 to 1 on my reward to risk ratio because I actually risked around, let's say, maybe $5, and I bought around here 170. So 170, and my goal is to make $10 or more. So 170 plus 10 is 180. So that's already 2 to 1. And I sold at 190. So I'm actually close to 3 to 1 reward to risk on this trade. So again, bought right here. I'm on 170. Stop below 164, 165. So actually 170, about around 170. Stop around 165. That's actually 10. I'm risking $10 to make make 20. So yeah, 2 to 1 actually, exactly 2 to 1, because I did buy around 170. So 170, stop around 165. I'm risking $10, and I let it ride and sold around 190. So that's 190 minus 170. That's $20. So I made $20 on a risk of $10. So risk $10 to make $20. That's a good reward to risk. You're literally risking $2 for every dollar. Your reward is $2 for every dollar you're risking. So you're risking every dollar. For every dollar that you risk, you want to win at least $2. So what that means, now there's a math formula that I will teach in another class. I have to go over a risk management class because the other aspect that's very important about trading is risk management. Because there's a formula to kind of determine how many shares do I got to buy If I'm risking $10, how many shares do I gotta buy? Well, actually, when I say I'm risking $10, it doesn't mean that I'm literally risking $10. Because actually, I could actually risk $500 based on those $10 to make $1,000. Okay, so there's a formula I'm gonna teach you guys later on. So I could even risk $1,000, even $2,000. If I'm a hedge fund manager, I could be more risky, and I could risk $10,000 to make $20,000. If I want to risk even more, I could risk $100,000 to make $200,000. And remember, guys, this is Netflix. Huge volume, huge opportunity to take large positions, which some hedge fund managers probably did exactly that. They probably risked $100,000 to make $200,000. I know it sounds crazy, but that's pretty much what they did. But I'm not at that level yet, so I only risked a couple $100 to make close to $1,000, a couple $100 as well. So, keep that in mind, guys. Stocks like Netflix, there's huge amounts of volume. You could definitely risk big money on these type of trades. So, to keep it simple, risk $10 to make 20. If you want to do the math, or you could change it up. Let's say you have $5,000 in your account, and you're risking 1% for every trade that you make. So $5,000, that's a $50. You're risking $50. So in this trade, you will be risking $50 to make $100. So, and let me see, 830. So about a week and a half, you'll make $100. You know what I mean? Simple trade. Again, you could always trade bigger. So let's say that you're risking $500. You know what? I'm gonna risk $500 in this trade to make $1,000. Boom. Let's say you have a $5,000 account. You want to risk 10% of your account because you believe in this trade. You believe this is a good setup. You believe in Netflix. The setup hell and is looking good. Market's trending. You risk $500 to make $1,000. Boom. Week and a half, you make $1,000 right there. All right, guys. So that's that setup. Again, it's not just Netflix. There's other stocks. Again, the FANGs are one of my favorite right now. I seen the same setup play on Amazon. Actually traded this stock the other day. It played right here, held support right here, and boom, look, it's trending. I actually traded this stock too, made some money right here. So you guys can see earnings breakout, high volume, consolidated low volume, show some strength, held the support, and boom. I traded that, so that's one right there. I seen it, actually, Boeing is another one. It's been trending hardcore. Boeing. Let me show you guys this chart. This thing has been trading really nicely. So there's been a lot of great setups right here, a lot of great pullbacks and breakouts. There's one right here. Earnings breakout, consolidated, held support, boom, trended all day. It did it several times actually. It did it right here too. I actually traded this one. Boom, breakout of high volume, pulled back, held support, traded this, boom, right there. This is actually more than 2 to 1. It's probably like 3 to 1, 4 to 1, 5 to 1 actually if you held it. This is a really nice trend on the 90 MA. So it's right there. So I'm actually showing you one that I'm actually in right now. I'm actually on Facebook right now. I opened a position today on Facebook. So the reason why you guys see these alerts, actually alerts alert me, what level it is. So I actually traded Facebook today. So again, it's been trading high volume, actually nice gap up on earnings. Now the other thing is learn how to read the volume bars and the volume price action. Pulled back, consolidation, broke out right here, and strong. I got in right here, so we'll see how it goes. My target is high days, so my target is over here at top of days. We'll see how that goes. But so far, again, the market's trending. If you look at the Nasdaq, again, the Facebook's part of the Nasdaq. This is the Nasdaq today. It was up like 1.28%. And looks like it's good. It's all-time highs right now, so it's trending. And believe it or not, it's actually the reason why a lot of it is political, like I mentioned. Again, it doesn't really matter. You don't even have to read the news. You don't have to worry about reading the news. You just gotta know how to read the price action. That's the most important thing. But me personally, since this is what I do all day. I mean, I do this full time. I do listen to the news just to kind of understand more the fundamental background macroeconomics, just because that's what I like. I did major in finance. I did economic classes, so I like that stuff. But you don't have to. You don't have to know the news. You don't have to know anything. You just know how to read, because the price action will tell you the whole story. That's really what matters at the end of the day. How does price react? And you don't really have to really read the news. As long as price action works, that's really what matters. But the reason why there was a big movement today is because the Senate did pass approval for that tax reform. So now it's going to go to the House, and then the House is going to negotiate. But that's good news overall. The market is waiting for this tax reform. So that is good news. So the market liked that, and now it's trending. So that's why, I mean, I looked at the Nasdaq is trending, overall market is trending, including SPY is trending. You guys can see that, and Facebook looks like it's ready to make its next move. So I went in. So we'll see how it goes. I'll definitely let you guys know. I mean, I could lose money, but again, I'm risking, I think right here, about around 178. My stop is at 177. So I'm risking like $1.50 to make, let's see, 180, to make around $3. So that's a 2-to-1 reward to risk right there. And I also like to add to my winners too. So yeah, I might even add to my winner. Now this is actually an intraday chart. So if you guys can see these last couple 5 days, this is the intraday chart. How does it look in the last 5 days? So if you guys can see that, last 5 days, consolidate, broke out of this trend, high volume, and then we're gonna see how it goes. So that's pretty much it, guys. So that is one of my favorite setups. Again, earnings breakout, pullback, support, and any questions? So I guess now that I went through all this setup, went over the basics of swing trading, knowing that, again, you have to want to be in a trend. Make sure that the stock market overall is trending, the sector is trending. That's where the stocks you want to be. And then look for the opportunities on high reward to risk ratios on earnings breakouts. So I'm going to go and see if you guys have any questions. Any questions, guys? Any questions? Okay, so let me see. I'm going to go to top to bottom on these questions. Let me see. All right, my computer's a little slow, so I don't know why. Actually, I'm not even sure why I'm not able to. Okay. All right, so I have a question from Lizette. What is the difference between swing trading and day trading? Again, swing trading, you are looking at 5 days to two weeks hold. So when you're buying a stock, when you're going long, you are looking to make money on a trend, on a couple days trend. So if you buy a stock, you're looking to hold for 5 to 14 days or more. A day trade is a trade that you make in the same day. So you buy and sell the same day. So that's the difference between day trading and swing trading. Now I got a question from Edgar. I think he mentioned, what platform am I using? Now I am using Thinkorswim. This is a platform from TD Ameritrade. It is free to use, but you do need to open an account. Just so you know, it's like pretty much like opening a bank account. You don't really have to open it with a lot of money, a couple $100, and then you could download the platform Thinkorswim for free, which is pretty nice. So, I mean, that's something that I will definitely advise to anybody and everybody. Actually, some of the videos that I made prior is my favorite system, my favorite platform to use is Thinkorswim by TD Ameritrade. So highly recommended. Again, it's free. There are some platforms that where they do charge money. They do charge like $200 or $100 a month just to use, but Thinkorswim is free, so why not use free software? Especially if you're starting. And I also mentioned my last video that Thinkorswim has a feature where you could actually use paper trading. Paper trading allows you to practice setups, without using real money, without risking real money. So you could actually, practice and before you trade, because a lot of trading is practice. Practice makes perfect. All right, so I think that's pretty much it. I don't see any more questions, so I'm just gonna type in if you guys have any more questions. And if there's any more questions, if there's no more any questions, I guess that'll be all for today. So just give it a minute and we'll see. Now my internet is a little bit slow, so all right. So Chris, what is your question? Now my internet is slow, so I'm not even able to see your question. Actually, I got a text from Lizette. Let me see. Can you repeat your question again, Christian? Because for whatever reason, my internet's a little slow, and I'm actually not even able to scroll up or scroll down on the chat, which is pretty lame. So it almost, I think this thing froze. It's really slowed down, so I think it might have frozen. I'm not exactly sure. So, all right, let me look at this text. All right, so Christian's question is there any good books on financial literature? Yeah, there actually are really good books that I recommend. There's actually a book that I actually really like. It's called Rich Dad Poor Dad by, what's his name? I forgot his name. It's Rich Dad Poor Dad. So look for a book called Rich Dad Poor Dad. Highly recommend that book. Has a lot of great insights on financial literacy, on finances, and how to manage your money. So highly recommend that book. Now, books regarding trading, there's a lot of books regarding trading. So, I mean, it really just depends on your style. I actually learned so I had a mentor, and that's how I learned how to trade. So I actually took on a mentor, which is very different in reading because I had a lot of personalized help. But books also do help, but I didn't really go that way. I actually literally got a mentor. But that's pretty much it, guys. So again, if books regarding financial literacy, Rich Dad Poor Dad, highly recommend that book. And actually, let me see the author. I don't know why, man. Let me see why I can't remember the author's name, but it's a famous guy. Let's see. There you go, Robert Kiyosaki. There you go, that's a guy. So Rich Dad Poor Dad by Robert Kiyosaki. That's an awesome book. Highly recommend that book for everybody. You guys are gonna love that book. So Robert Kiyosaki, Rich Dad Poor Dad, highly recommend it. All right, guys. So that's pretty much it. Hopefully you guys learned something. I'm gonna put again another questionnaire, so another poll. So let's see what we could do next week. And again, feel free to ask some questions on the group, and we'll see you guys next week. All right, have a good one, guys. Bye. Well, actually, there's one more question. What's the question? Oh, actually, yeah. What is the question? Again, I can't see. I don't know why my internet slowed down, so I can't see a lot of these questions. So, Lizette, over there, can you text me the question? Because I can't see it actually. All right. Okay, I got a question by Edgar. You know, what are the top stocks to keep a lookout? Again, the fangs. The fangs are the top stocks that I keep a lookout. So that includes, so the fangs are Netflix, Facebook, Amazon, Apple. Let me see, Apple, Netflix, and Google. Those are the top stocks that I look at. The reason why is because the tech sector is trending really good, and there's a lot of great opportunities to trade around that trend on the pullbacks with these big techs, because these are the leaders. These are the market leaders. The fangs, excuse me, are the market leaders. These are the stocks that are leading the whole market, and they're really bullish. So when their stocks are trending, leading the market, there's a lot of opportunity to swing trade those stocks. So I look at the fangs. So again, Facebook, Amazon, Apple, Netflix, and Google. All right, let me see if there's any more questions. All right, so I believe that's pretty much it, guys. So I do apologize because of the internet. It's very slow. I don't know why, but I hope you guys learned something. Again, the most important thing when it comes to swing trading or day trading is you have to get the platform. You just have to get the platform. I mean, you're never going to be able to practice if you don't even have the platform. And again, what I highly recommend, if this is something you want to do, is get the platform and do paper trading. Practice, because again, it takes time to learn how to read the charts. It takes time to learn how to read price action. It doesn't happen overnight. It takes time. So highly recommend it to have a platform, and paper trade. You don't have nothing to risk. You're not risking real money. Paper trade. Take your time learning how to read. Get your eyes used to reading the price action, reading the candlesticks, the volume bars. That's going to help you guys a lot. All right, guys. Well, hey, hope you guys learned a lot, and I'll see you guys in the next webinar. Have a good one, guys. Bye.